record. All right. So what are we talking about? We're going to be talking about support resistance breakout plays, my number one strategy, what I use every single day. Pretty much when the price blasts through a certain level, it's like a green light, shoots and goes to the next level. Okay, guys? So now I'll show you how to spot these decisions, these moments, capitalize on them, and pretty much manage your risk, okay? Because obviously trading through breakup plays or identifying support resistant plays is super, super important to leveling this up. And later, after we had that really, really bad price action for like an hour and a half, and then we finally decided to go the way we wanted to go halfway through the day, is when price and support resistance levels were really hitting. So that's okay. I just want to clarify, sometimes it takes a while for the market to actually figure out what it wants to do, and that is okay. But at the same time, here, let me turn that light on real quick. At the same time, if we miss the play or if nothing happens while we're on the markets and then we just walk away, that's okay too. Okay, guys. So a few things I'm gonna pretty much like explain. A lot of you guys already know what support and resistance is, but a few people, just for a quick recap, just like imagine the market like pretty much like a sports arena. The support and resistance levels, they're like goal lines where the games can change in an instant direction. I know that sounds pretty corny, but it's true. Like, you know, often it bounces, it or breaks through. It's a signal that the market is ready to pretty much score big or move in a pretty solid direction for the day. Okay, so here's what you need to know. Yo, what's up, Bob? Support is where buyers step in and halting a downward moment, obviously, right? So we can see on my screen right here, here's where support is. It obviously, that's where buyers are. Here's where support is, and here's where support is. Okay, pretty basic. Resistance is where sellers obviously overwhelm buyers and stop upwards progress. Obviously right here, right? So sometimes it's kind of hard to know, okay, it's how do you know when a certain level is going to break or not, right? How do we know that this level is going to break instead of just doing something like this instead, right? How do we know that this is going to break right here instead of doing something like this? Or how do we know that this is not going to break and do something like this? Okay, and that's going to be talking about as well, so we can make sure we capitalize on them. And there's two ways of playing support and resistance lines. You guys know me. I love to trade breakouts, like key areas like this. And I usually don't trade like the retests on them, because or the retest to like try to play inside the range. I usually don't do that. That doesn't mean that you guys don't have to. And sometimes I do take those trades. Sometimes we can identify, as of like right here, this is kind of a range. Like we could have played a play that on the break of structure here, entered, and then our take profit could literally have been at that level of resistance, right? Even though it did continue to go higher. Obviously, we don't know that, but that's a really good formation. Entry, exit, that's more than enough for us for the day, right? So there's things like that, okay? Continuing. So how to add trend breakouts into mixes, like uptrends. So like we're going to talk about support resistance levels with trends. Okay, so we're going to add support resistance, and then we're going to add another thing with trends, and then from there we're going to add risk management. Okay, so the very first thing, I'm actually going to make this, that's fine, I'll make it like that. That's cool, since we have TQQQ, it's the same exact thing. And then you guys can cut me off or whatever while I'm talking here. Okay, so obviously the first thing that we always want to do is we can draw our support and resistance levels on any time frame. We can draw them on the 1 minute, we can draw them on the 2 minute, 5 minute, 15, 1 every single time frame. They're there. But to make sure that we're drawing them and making sure that they're not like kind of weak support and resistance levels, like technically if I zoom in right here, this is a support and resistance level. Here's resistance, here's support, right? But this is super lame, right? It's not that important compared to a level like this, right? This is a huge level. This is a very important level right here. This support, this resistance, compared to this resistance right here, this means nothing, right? So how can we make sure that we want to be aware of something like this and something like this, right? How do we know that most likely we're not going to break here unless it's more market open, or if something have crazy news coming out? Whether like something like this resistance, most likely it's going to break. How do we know that? Well, that's what the time frames are. That's why time frames are super important. So when we go to like a bigger time frame here, this is going to tell us where those really important levels are. This is going to tell us, okay, these levels are going to make it a little harder to break out. But the ones that are on bigger time frames, when they do break, they are going to have massive upside or downside potential compared to something that just breaks slightly, like something like this, right? This is technically support and resistance right here. We do break and it's a pretty nice move to the upside, but it's not like a clean, like, okay, hey, this is a huge level. If we break this, the markets are flying, or if we break below this, the markets are tanking, right? But we can still make plays on a smaller time frame, but we still want to make sure that we have our gist on, okay, where are the main key levels? So as of right here, we can see on a 2 hour, 1 hour, and we can identify this level, which is right here, right, on every single bigger time frame. Okay, I'm gonna pause real quick. Question on how comfortable and how confident are we on drawing our support and resistance levels? Are we kind of like masters where, like, you guys, if I tell you guys, hey, come on up here, and you guys can literally draw your support and resistance levels in literally 5 seconds without even thinking about it, like, you can draw these levels this quickly, like, we cannot even think about it. How comfortable are you guys doing that, right? Or are we kind of like still slow, still kind of like, okay, I kind of get it, but I'm still learning the process. What we got? So we got 8 out of 10. So I mean, that's pretty nice. 8 out of 10. Think 7, 10, 3, 10, 10. So 50-50. Okay, so that's why drawing support and resistance levels on a smaller time frame is going to be harder, because there's going to be a lot more fake outs compared to drawing them on a bigger time frame. Okay, so that's why we can even, like, on the 1 day, we can see that it's kind of harder now to see that main level resistance. But if we go to like the 3 hour, this tells us pretty much everything we need to know. Okay, just by having this much information from here, all of this can pretty much tell us what we can trade. This has got a game plan. We don't need to look at all of this, not yet, right? What do we got? Hold on. Yeah, I did on the 1 minute yesterday. That's why I lost money and learned that pretty quickly. I'm not saying you can't play break of support and resistance levels on a 1 minute time frame. Just like I said this morning, there was a lot of 1 minute support and resistance breaks on a time frame, but we have to go on a bigger time frame to identify why would this break right here make sense on a 1 minute, where something like, I don't know, a break right here wouldn't make sense, right? Even though we try to catch it. Again, maybe because we're just in really bad market conditions and consolidation. But let's go ahead and go back to the 3 hour, okay? What we can see here is we have our main level of resistance right here. And it's bounced twice on a 3 hour time frame, which means this is a very, very, very big wall. I know Future King's not in here though, but he uses that heat map, right? And I'd probably bet you that if he pulls up his heat map and he shows you, okay, what are orders at 27.27, there's going to be a lot of unfilled orders here. Now you're going to ask me, Will, what type of orders are they? Are they buy orders or are they sell orders? They're probably a mix of both. We can't know if the orders are going to be, oh, these are orders to go long, because some people have resting orders here the wait for to trigger to go long, or some people even have resting orders here to trigger to go short. We don't know if they're buyers or sellers, but we do know that there's even on Bookmap it tells you how many orders are here. I think there's over $750 million worth of orders being rested here, which is ridiculous. $750 million, which is kind of another crazy thing to tell you guys. We are literally less than 1% of the market. Me trading, you trading, even every single student's money inside of this still represents 0.0000 times another 100 zeros times another 100 zeros, 1% of the market. Okay. So our measly little $1,000, $2,000, $5,000 trade doesn't mean anything. But if you have 200 million people putting the same exact order limit on here, yeah, that means something. Okay. What do we got? What do you think if we play a 5 minute support resistance gets broken on the 1 minute? Would you enter off that or wait for 5 minute close? Yeah, good question. Let me continue, and yeah, this will probably answer it. Okay. So if I'm looking to trade tomorrow morning, right? I'm looking for a game plan for tomorrow morning. What do I see? What am I doing? All right. Well, the 1 day time frame, pretty much, I don't really like drawing my support resistance levels on the 1 minute. only support and resistance levels I will draw on the 1 day time frame is the most latest main level resistance is right here, which doesn't mean anything because we're all the way down here, so that doesn't make sense. And probably the lowest point that we have so far, which is down here. We're trading right here. So again, that doesn't mean anything, but I can draw it there if I really want to, okay? But what we can do is I can draw a level resistance right here. Why will I draw a level resistance right here? Does anybody know why I'll put a line right at this candle wick on the 1 day time frame? I'll give you guys a few seconds. You can say I don't know if you don't know. No, why would I put a resistance level right here, or a resistance line right here? Retest, fair value gap, nope. Multiple touch points and rejection. Too many candle touch line. Break a structure, yes. Okay, so like Ashley and Scarlett kind of got it, and Carlos. So you say multiple touches. That is correct. Scarlett, you said break a structure. That is correct. So, and this is the 1 day time frame, right? Which means this time frame and these levels are going to be extremely, extremely, extremely important to break or not break. So if this level right here broke on the 1 day, yeah, we're going to be dumping hard. Look what happened. We have a very, very strong level of support here on the 1 day. What does this mean? We're probably going to shoot higher, right? Because every single one of these candles is 1 day of price action. So if you actually want to see, this is right now today. This candle is going to close in 21 hours and 45 minutes. Right now, this is how much it moved. This candle was today, pretty much today's market, right? We opened all the way down here, right? And then we went all the way back up to here. So this was why Mark's like, what the heck? What does it want to do? This wick messes with people. We go short, we go long, what's going on, right? So that's why I'm saying that I want to be aware of this price all the way up here, because this is a very important level. If we break above here, 9 times out of 10, we're most likely going to come all the way back up to here. And this is on the 1 day time frame. This is an insane move. This is a 21,136 to 22. That's over 1,000 point move, right? So this is a very key level for us to be at least aware of. That doesn't mean we're going to like, oh, well, I'm not going to take a trade until we hit that. No, but we have to at least be aware of it, okay? So that's something I'm keeping an eye out of, okay? And as well, I'm keeping an eye out these lows. If this 1 day support level gets broken, we're going a lot lower, okay? So, and if you guys want to, leave these lines up here. And what's really cool is you can even add text. And I could say 1 day TM time frame or TF time frame resistance R line, okay? And I could change the color, whatever. And then the same thing, I could put the same exact thing. Here, I'll make that, I don't know, white? Yeah. And then I can do it down here. 1 day TF R S line. Okay. So it doesn't confuse you. Let's make it white. All right. Cool. So now let's go to a smaller time frame. Now we're on the 3 hour. What do we got? So we have our level resistance right here. And I'm saying if we break above 27.39, most likely, and when I say break, not wicks, a candle close on a bigger time frame, 27.36 or whatever, 27.36, we have room all the way up to that main level that we found on what? The 1 day time frame. Okay? So when what we can do now, let's go ahead and type in on our text 3H, 3 hour, TF, time frame, R line. Okay? And I can make these look prettier if you want me to. We could do 1D, TF, R line. Okay? And then we can make this one look a little prettier so like everything matches. Okay? 1D, TF, S line. Cool. All right, so now let's go to a smaller time frame, or actually right here, right? We have another pretty main level of support, or sorry, resistance right here, and we can do the same thing. We can do 3 hour TF R line. Okay, now let's go to the 1 hour time frame. What do we got? Well, we have pretty much a little bit of like this is just wicks or something. So honestly, if you guys want to make sure that you really don't get wicked out of position and you really want to short, don't look for a short here, look for a short down here. Now, what we can do is we can be aware of these wicks, right? Because every single wick has liquidity inside of it. Where's liquidity? Potential resting orders here, okay? So what I can do is I can get my rectangle tool out and draw a little box here, which pretty much tells me something. So once we enter this box, it's going to tell me two things, okay? It's going to tell me that we potentially bounce off of this, come back up to this level of resistance, or if we break through this, we're most likely going to come all the way back down to here. Does that mean we could take, do we want to take a play inside of this box? That is entirely up to you. That's why I say trading is so customizable. You can say, no, this can just be an area for me to get ready to short down here, or an area to get ready to go long right here, or play a quick short play to here, or long play here to here. This looks more respectable if we can get down here and then come all the way back up. And then how can we make sure that we go in with the trend? Like how do we make sure that we don't get stopped out from getting a fake out or whatnot? And that's where breakout structure comes in, okay? That's where if I go to a 5-minute time frame, you can see right here. So let's actually have 2-minute. There we go, right? Look at this. You can see we come back into the zone, support, break a structure, entry. Boom, right? But this is on the 1-minute time frame. So let's go back to the 3-hour, okay? So that is an area that I want to be aware of. That doesn't mean that I can go long or short, but it could potentially mean something if I like what price action is doing. All right. Now let's go to the 30-minute time frame. What do we got? All right. Well, really nothing. Let's see. Do we have any levels of resistance that we should be aware of over here? I mean, yes. So when you guys see these levels here and here, these tiny little, okay, this is a little bit more important than this wick, but there is still liquidity here, but it's not as important as this level. So what do we want to do? Let's see, actually, let's look at something real quick. All right, let's go to the 15-minute. I'm going to skip that 30 because I want to see the levels a little bit better. What do I mean by that? Well, if you go to the 30-minute time frame, it's kind of just like, it just shows you the wicks. But if we drop down one time frame, you can see, or even we'll see what the 5-minute looks like. Yeah, all right, the 5-minute looks a little better. So we can see that at this level, what do we got? Another level of what? Resistance. Okay, so we can type here 5M R or TF, or we don't even have to put TF, we can just 5M 5-minute. It's whatever, it's really however you guys want to do it. R line. Okay, and then we can do, we have resistance right here, and we can do same thing, 5M TF R line. Okay. So now our game plan is slowly getting formed together, okay? So, and what we can do, we can go to the 2-minute now, and there's more levels of resistance, okay? We got a level of resistance on the 2-minute technically right here. We got resistance on the 2-minute right here, or support, sorry. How about, and that's it, okay? So what we can do is we can do TUM, TF, S line as support. Same thing with here. 2M, TF, S line. Okay. So let's see. Do you ever scalp up or add more contracts during the trade? Depending upon the trade, and I can get into that in a second. Okay. So when we look for these levels, you can see right here. See how our line's off a little bit? Well, why is our line off a little bit? Well, because I kind of put it right here. So if you guys want, we can kind of do two things. We can keep it here and wait for this break, or we can move it down to the previous data we got, which I mean, we're literally off by barely anything. So I would probably put it at the most recent high, which is right here. Okay. And it's still the 3-hour time frame. Okay. So now we have all of our data. We know, and every single time frame means something different. Since this 2-minute time frame most likely is going to break a lot easier than a 3-hour time frame compared to, let's go back to the, we can see here now. Look, so this was a 3-hour, this was a 1 day, this was a 5-minute. Look at the 5-minute. Why does this mean that this isn't that important level? This most likely is easy to break because it's just a little wick, right? Let's go to the 1-day time frame to show you kind of what we drew here, right? 3-hour, but this is on the 1-day time frame. it's still important, but not insanely important. 1 day means a lot more. 5 minute, you can't even see the 5 minute level of resistance on the 1 day time frame. 5 minute, you can't even see that 5 minute resistance on the 1 day time frame. Here's a 3 hour, you kind of can see it. 2 minute, yeah, maybe this tiny little wick here, barely can see it. 2 minute, can't even see it. And then here, 1 day. So that's how you guys can use to start formulating your game plan. Okay, now let's go to the 2 minute time frame. Okay, we can actually see that we have another level of resistance right here. But I mean, it really depends upon how you want to trade. Do you want to be an extremely quick scalper, which means, okay, I'll try a long here into the 3 hour time frame. Obviously not right now, it's after hours, there's no reason to. So if you really, or let's even go to the 1 minute time frame, right? Here's a 1 minute. Okay, we can even do 1 minute TFR line. Okay, and now our job as traders is to do the next thing: trend and game plan and risk management. And then this is how you kind of identify your trend. You can be like, I really don't want to trade this 1 minute breakout. I'm just gonna wait till the 3 hour, or you know what? I'm gonna wait till the 2 minute support line gets broken, or I'm gonna wait till the 2 minute support line down here gets broken. And what you guys can do as well, if you want to be even more accurate in your trading, you can draw boxes in these zones. And what do I mean by that? Well, you can go to the rectangle tool, and you can just, and I've showed some of the older students this get the rectangle tool, get to your support line to the next wick, because you guys can see how this level of support right here, this is still that support, but we're not touching it, because no matter how accurate your line's going to be, the markets aren't going to be exactly perfect. It never is, right? So how can we kind of like make sure we don't get wicked out, or make sure that we're a little bit more confident in the trade? We can draw a rectangle tool. How are we going to do that? From low to these space highs. And there we go. There's our rectangle. Now, obviously, we want to kind of zoom out so we can draw it to all the way over. So it'll be kind of like this. Okay. Now we can do the same thing with this zone. Right here to right here. Same thing with this. I'm going to skip that. And when you know when you should or should not draw these lines, like right here, I would not draw it because look how wide this would be. It's a little wide. So what I can do is I'll be like, nah, I'm just going to wait for a clean break above here. You know? And then right here, I wouldn't even worry about it too, because you don't want to have too big of a, like, that's ridiculous to have. You know, I would just, and you guys can see, well, yeah, Will, look, there's all this type of resistance all right here. What do? Ignore it. If it wants to just hit this and go like this again and just be annoying, we don't want to trade that. Ignore it. Wait for the main level to be broken, right? Okay. Now, while we look at this, let's add, what else we got? So basically the support line is what price trend bounces off the most when it hits a downtrend. Correct. So support is pretty much where buyers are sitting at. Resistance is where pretty much sellers are sitting at. But our goal as traders is to do two things: play a breakout of one of these two zones, or play with the trend. So if we actually come back up here and then bounce all the way back off, how can we trade inside of these ranges, right? As traders, we can look for trading outside of the range, a break outside the range, or just trading inside the range. Again, that's up to us to decide, okay? If you are just looking for a trade inside of this range, well, what is our game plan for that? Well, once it comes back up to this level, two things are gonna happen. If we break out of it, well, we can't really trade inside of that, so our game plan is kind of doesn't mean anything. Well, if we decide to break out of it and come back down and retest, maybe our bias wants to go long, right? And that's where kind of, if I miss the initial break, I will wait for the retest. Like, let me see if I can find a good retest example. Here we go. We break this example. It took a little while for the retest to happen. Look, we broke it, came all the way back up to that level to come all the way back down, right? And at the same time, it's just super wicky, super choppy. I would just ignore it, okay? As of right here, here's an example. We're looking to short this, right? You want to short this? Well, there was no confirmation to short this. Why was there no confirmation? We never broke structure. We never came back down and broke a lower low to head to the downside. We had strong buyers, came up and went to the next level. So Now our decision is, are we more comfortable playing inside the ranges, or are we more comfortable playing the breakout plays? I'm more comfortable as a trader, for me, to play breakout plays. Okay, and that's why I only trade from 8 a.m. to 10 a.m. because there's the most likely for volume, the most likely for breakout plays to happen, compared to trying to just trade inside of these zones. It's annoying. You probably get stopped at a lot more. Okay. After a break, how many candles should we wait of test? So I usually trade the break, right? So for example, let me see if I can find one. If I traded this break right here, right? Part of my headphones got disconnected. It's weird. Anyways, so if I trade the break right here, where would I put my stop loss, right? I would put my stop loss initially. I would like to put it below this wick, which in this case scenario, I would have been stopped out, right? And if I would have been stopped out, cool, that's fine. I'm risking such little money because I'm going with right position sizing. So now let's say I get stopped out for a, I don't know, $150 loss, right? Well, you can see that overall, the play would have still worked. So what could we have done too? Now we can be like, okay, I got stopped out, instantly came back up. I immediately have to recognize, okay, if I want to re-enter this to see if I'm going to actually be okay and be right in this play, I'm just drawing lines here, we would want to probably wait for a higher candle to be broken here, which in this case scenario we did. So I can take another long position. Again, stop loss would be below this candle wick, and then this play would hit. All of our job as traders, guys, is to have high probability win rates and have our risk as small as possible. That doesn't mean we continue trying to trade every little time something happens, because then you'll be like back sort of like Tony or like that you guys, and I'm not trying to tell you guys out, I'm just giving you guys examples, that you guys trade 20, 30, 40 times. Our goal is only trade 2 to 3 times, find key level setups, not try to play every single move in the market and try to make money off of it, right? Like you can see right here, we can see we have a strong bounce broke, but then we just started consolidating, being choppy, and then we came all the way back down to here. So that's something I'm going to leave for tomorrow, okay? So you can see right here, do we want to take anything? No, there's no reason to take anything here. It's boring, right? We can just wait for this break happen, get in on the break, stop loss below that candle, target what? We would probably want to target probably around here. Well, will you be like, well, why don't you target all the way up here? You can, but there's all these levels of resistance that'll probably make, that's why I hate big consolidation things, because now there's all these levels of liquidity and orders that are going to make the price probably rip here and then struggle in this area. And then once we struggle in this area, then we finally probably rip here and then we finally go. Okay. After breakout, the first candle is candle test. What do you mean? I usually trade the first break, right? That's why I'm a momentum trader. Okay. I like, if we have volume, momentum, and a key area for broke play, I love entering on that initial play because volume comes in. There's a lot of buyers coming in. We just get on the momentum and we ride the candle. Like yesterday, right? We rode the candle, right? We didn't usually wait for that retest. If I like playing the retest, what I like to do is I don't like it coming like this, back down, and then enter here. What I kind of like to do is I like to do something that it breaks, comes back down, and then instead of being faked out trying to enter on this level, because sometimes it can be like go like that, I would like to play the next high break for confirmation to say that we're still in an uptrend. So I would play a position right here. So then if we bounce here, entries here, then we continue. Okay. What else we got? Can you explain where you put your stop loss? Yeah. So my stop loss is always going to be between the low candle break, or so for example, let me see if we can find a break here or example. Even let's do this morning's example, right? So if I took this short, which I missed on, right here, actually, let me draw a horizontal line here, right? If I took this play, where would I put my stop loss here? I wouldn't put it all the way up here because this is the candle high. That's too big of a risk. That's too big of me, because if we get wicked out, and that would be a pretty big loss. Even if we trade light, I don't want to risk all that. If I'm just trying to scalp this, there's no reason for me to risk my whole P&L right there. So I will probably put my stop in this example at the 50% candle. So I would put my stop loss here at the 50% of this candle, right? So if we come all the way back up, I'm okay with getting stopped out, right? I'm still controlling my risk. Our goal is to control our risk. Our goal isn't to try to make a quazillion dollars on one play. Our goal is to be able to risk little as possible. And if we do get stopped out, which we will get stopped out, it's part of trading, we have to know that. It's not something that we're going to swallow and be like, oh my gosh, I'm about to blow my account. It's over. And that's why when I say you guys go into heavy, if we get stopped out on some plays, which does happen, right? You guys should be like, oh, it's just a $100 loss. Or, oh, it's just a $400 loss or a $300 loss. Because if you have a $300 loss and your next trade you win $700, you're fine, right? And then immediately, and with momentum plays, immediately when we go into the money, like for example, if I would have played this, I would have moved my stop loss very quickly because momentum's on our side. We're definitely coming in here. So once we're really coming back down, I will put my stop loss to break even because I'm trading the momentum. That's why later in the day when we try to play momentum breakout plays, we most likely get stopped out because volume's not on our side, momentum slows down, the market kind of trades a little slower. It's a little harder to play breakout plays, right? So if we don't, that's why we can turn into, instead of playing breakup plays, we can start playing identifying support, identifying resistance, and then playing entries like something like this or something like this entry here, right? Because this would kind of make more sense because now we're targeting inside of these ranges because market moves slower. And that's why I love trading, because every single day is different. Every single day, something new is going to happen. I don't know what's going to happen tomorrow. I don't know what's going to happen a week from now. But I stick to my strategy, identify things I need to look for, and then take the position and control my risk. Okay? And it can get kind of confusing. I get it. Like, there's so much stuff. Like, and you might second guess yourself. Wait, do I take a play breakout here? Oh, man, maybe do I short it? Oh, my gosh, what do I do? Right? And that's why maybe going to a bigger time frame. Okay, what is the trend doing right now? What are we doing? Right now, we're looking like we're going into an uptrend. This is consolidation. We're going into uptrend. So maybe we just want to look for long positions. So if we were here, maybe looking for a breakup play here looks a lot more attractive than trying to go short. You know what I mean? I have an auto stop at 200, which is still stuck, but rather lose 200 than a huge drop and blow my account. Exactly. Or depending upon how many going, because if you're going in with one NQ contract and you have a max loss at 200, you're not going to give the play enough room to be able to do what it wants to do. You might get stopped out in 3 seconds, and then the play does your thing. You want to give it enough room, but not too much room to where you are sweating a little bit. Like that's why I put it at low candle, because most of the time, let's say I want to get in on this break, right? If I put it immediately at that, like right here, this tiny little candle wick is going to stop me out. That's why I'll probably put it at that 50%, because I won't get stopped out, but I'm not putting it all the way down here to where I'm risking this whole move back down, right? So it gives it enough room, but not too much to where I'm wrong. So if we do get stopped out, I will be okay taking that loss, right? And that's where position sizing comes in and risk management comes in. And that's why I always tell you guys, identify support levels, identify key areas of interest, and then have your risk. Okay? And this is literally what I've used for the last 6 years to make money. Okay? I don't use ICT, SMT, fair value gap crap. Do I know it? Do I sometimes use it? Yes. But I usually don't. This has been around. Did I invent this strategy? No. Was Will Trades the person that invented this and I'm the only one that uses this? Absolutely not. I learned this while going and then critiqued it, like adding break a structure. I added where I want to put my stop loss through trial and error, doing this 1,000 times. Right? Where can you see volume in TradingView? Yeah, if you just go to indicators and just type in volume right here. And there should be volume. You have a volume indicator that comes down here. And you guys can see, like, look how low volume is right now. This is after hours compared to, like, this. And what's super compared to, like, during the day, right? And if you want to go to, like, the 2-minute time frame, you guys can see, like, this was this morning, high volume, kind of died off. And then look at this. Volume exponentially increased right here at, 11 o'clock to just shoot to the upside, which is pretty interesting. And then we had one big wave of volume right here. Would you put a stop loss below bearish fair value gap? Or if you are trading fair value gaps, which again, I don't really use, sometimes I use, I would put my stop loss above or below the fair value gap, correct? Yeah. And then my take profit would be above or below the fair value gap. But I don't really use fair value gaps. Like if I want to, let me pull up my fair value gap indicator right here. right? So for example, if I wanted to go long here, let's just say I would want to go long right here, where would I put my stop loss? It'll be below the fair value gap. And then my take profit, if you're just trading off of fair value gaps, would be at the 50% of that fair value gap or full TP at that 3-hour level. So you guys can see right here, look what the fair value gap kind of tells me. And I already kind of knew this without even putting my indicator on here, that once we get to this level, we're going to probably have some problems. If we break above here, we're going to have some room, but then once we get into this area right here, we might have some problems, right? But if we can cleanly break out of this, then yeah, we're moving, right? So that's why it's good to kind of identify fair value gaps and stuff. I don't really use them because even not having that fair value gap indicator or even using fair value gap, I know that there's a ton of resistance here that is pretty much going to tell us we're going to have problems when we get into this area. Okay. Which means tomorrow we'll see what happens. I'm just delete all these lines here. Okay, did I answer your question a little bit? Would you think of buying on support and selling on resistance? No, not really, because if you're looking for a that's a yes and no answer. No, because let's say this is a resistance level right here on the 1 minute. Let me go to the 1 minute time frame. This is resistance right here. If I'm looking to short this, because you just told me, would you sell on resistance? Well, what if I'm looking for a breakout play? I would buy on resistance if we break. And I wouldn't just sell, like for this example right here, I wouldn't say, oh, it's touching it, I'm selling. No, I would wait. I would probably, if I was looking for a short here, I would enter short here. Because why? We broke a structure, last lower high was broken. Now we're going to continue. So I would enter short here, stop loss here, and then ride the wave to what? That's why it's really cool to have our levels of support resistance, because look what happened. We came all the way back down to here. Okay. But at the same time, you're like, well, we're in support. Don't we buy here? Well, I wouldn't buy if we just touch this level. I'll wait for some type of confirmation. What would that confirmation be? That confirmation would be being able to have this kind of break of structure. It's not the best. This is a little bit of break of structure right here. This is a little bit, but kind of bad because look, this is consolidation. That's why I don't really like trading inside of ranges, because it's a lot harder to make sure you don't get wicked out compared to just waiting for a break to happen. And that's why I only tell you guys trade 1 to 3 times a day. If you guys try to like read these markets and just sit in front of your computer all day and say, okay, I just made a new level of support here. All right, let's happen. And another thing is, all these levels of support and stuff, if I went back in time, right, we can still see we identified support and resistance on these wicks, identified resistance on these levels, right? So if we continue, like I know most likely we're going to come back down to here. Now, if we even go more back in time, yeah, I don't know that there's resistance. Or, I mean, yeah, look, I do know there's resistance here, but I don't know which one's going to be super strong. So if we continue, that's why I like charting my support and resistance levels. Because look, we just broke right here, right? We retested it. We're going higher. But I like to, while the markets are moving, I like to start changing my levels of support and resistance. Because once a level is broken or something changes, because the markets change always. They always change. They always change. I'm constantly changing my levels, constantly critiquing my levels, and constantly showing, okay, this level right here just happened. It broke. It doesn't mean anything. I'm going to delete it, rechart. I might, like, halfway through the day, delete everything and then rechart again. And that's why I want you guys to be super, super comfortable with identifying these levels, because you're going to have to constantly change them. Like, so if I leave what we have right here, by tomorrow morning at 8 a.m. when I wake up, or 8 a.m. when I hop on with you guys, all these levels, the market's moving. So all of this can then become invalid. I might have to delete everything and then rechart. So tomorrow morning at 8 a.m., that's what we're going to do together. I'm going to have a blank, naked chart. And then I'm going to chart everything for you and break everything down. Okay. What else we got? I know I just gave you a lot of information. Questions? More questions? Is this kind of making sense? Or are we more lost? What do we got? Makes sense, okay. And Omar, he uses my strategy, but he just might use, that's why that short that he took this morning, he understood that something broke here. We were in resistance, we broke, and that's why he took that short here, because we broke structure. I just didn't want to take that. I was just waiting for a key level to break. Excuse me. Okay. This is really good, thank you. Yeah, of course. You guys are getting, and literally, like, people, like, it's ridiculous that people don't even talk about this at all, you know? I have not seen a recent video about this strategy in, like, since I started trading. Like, now all I see on the internet is ICT, and like, that's all I see. I don't see people talking about support and resistance levels. And this strategy itself is so easy. And what we can even do to even make it, and this is another step. I don't want you guys adding everything right now, right? We can just see in here, right? We have resistance, we got support. Cool. But inside of this, there's something that's kind of like shouting and screaming back out to me, right? We have what? A trend, right? Well, my algo says that we have a trend right here. Yes, but we do have another trend right here, right? So if I just leave this, does that mean I want to play a short on this break trend? Yes and no, right? If we bounce strongly off of this trend, it's another confirmation to tell me, okay, Will, we're most likely going to continue and most likely break here, which means then this is just kind of a confirmation tool. If you're like, well, hey, Will, I want to go ahead and break this level. I want to play this break of trend. I hate playing the first initial break on trend lines. You get wicked out probably 7 times out of 10. What I would wait to do is wait for this to break, right? Once this breaks, wait for the next low to be taken to take the short, or sometimes what happens is we break, we come back up to retest it to go lower, or sometimes we just do this and then go lower. So I'll take a position here short or take that retest short. If I was looking to, and then what would my areas, where would I look for take profit? Probably just like I said, all these areas of liquidity down here. Okay. So glad I got off work on time to watch this lesson. Yeah, it is recorded. I will be posting this recording in the next maybe 30 minutes after the lesson's over, so you guys can rewatch this constantly, and then all the students that missed the lesson can watch it as well. Okay. Nice, simple, back to basic. Yeah, and everybody's like, well, why is like people think that if you make a strategy sound super cool, sound complicated, then that's where all the money is, because everybody thinks the harder it is means that it's real, and the more easier something is means it's fake. I don't know why. It doesn't even have to be with trading. It's just in general. Like if you buy, like when I played hockey in high school, there's hockey sticks that range from $120 to $700. Now the only difference between that $700 hockey stick was, yeah, maybe the materials, maybe it was lighter, but both work perfectly fine, right? Maybe one was way overpriced because of a name, but it did actually worse than a $200 hockey stick. So people always think that when you make something more complicated or something's overvalued, that it means something better, but it doesn't. Don't remind me, my 2 oldest played travel hockey. No way. Yeah, I played hockey for like 9 years. I played on like my varsity team in high school. I wanted to go to college for it. Like my dream was like to play hockey in college, but I had 6 concussions throughout like 9 years of hockey. That the doctor's like, yeah, if you have one more, what's it called, concussion, you're done, right? And you guys see, look at that, trend broke. Look what happened, right? In this example, we just flushed, right? So you guys, oh, if I just entered here, but no, let's wait a little bit. Let's wait for, if this is continuation, maybe a retest will come, right? Let's go. All I see on other channels is SMT, FVG, PO3, not that. Yeah, exactly. Which is weird. It's really weird. Why? You know? It's weird. So, and is every person that you see doing SMT, FVG, PO3 making millions of dollars or hundreds, or not even, I would say millions, it's a lot of money, even making a living out of this? Maybe at 1 out of every 30 people talking about it, right? So, and you guys, what I'm saying is you guys can customize it. Omar uses fair value gaps still, but he incorporates his fair value gaps with this, so he has kind of a two strategies to implement. You don't have to say, okay, I'm never looking at fair value gaps again, or I'm never looking at SMT or breaker blocks. But if you have that knowledge with this knowledge, it just will make you 2 times better. Right? And then if you just want to use this level, I mean, you don't need to have both. I usually don't. I usually stay away from fair value gaps, SMTs, and all that stuff. It's just too many confluences and too many hard. Like, technically, this is right here an SMT, right? Shift in market direction or whatever it's called, right? You can see here's a high, here's a lower high. Just from this example, it's right here. Here's a high, here's a lower high. right? And you can even draw a little trend line like this, right? Here's a high, here's a lower high. What's most likely going to happen here? Come back down. Now we just broke trend. Come back down. Now look what's happening. We're about to probably retest this, right? So what do you guys think? So hold on, give me 2 seconds. I would have entered short. Yeah. But look, so see right here, right? This never might not retest. So now I might take a short position here, right? Because now we know we're in a continued down direction, right? Instead of, or we might come all the way back up to here to retest. Look what's happening, right? See? So we're coming back all the way up to retest. So we can look for a short position here or a potential short position here. But I hate trading retest because most of the time it can be fake outs. I like trading with momentum. I like trading with direction, right? But the only thing with in this example is, okay, let's go short here. We do have liquidity all right here. So we do have to be aware of that, right? So we might come back down to here, jib around, and then come back up again, potentially, right? Cool. On higher time frames? Yeah. What do you mean? You look at fair values on higher time frames? Yeah, and that's good too. I always say look at higher time fair value. Yeah, that makes sense too. Okay. What else you got? Can you guys believe it's already coming up to an hour? What else you got? What else you got? At the same time, right? You probably are already going to be back at break even because you probably gotten filled here. You might have gotten stopped out if you did breaking the stop here. What makes an inverse fair value gap? Where it, let's say for example, let me pull up my fair value gap. So let's say for example, this right here, this is a bearish fair value gap. If this candle or the next candle closes above this bearish fair value gap, it inverses it. It changes, right? So, and then this actually would go away because it's an indicator. But you can see that if I just draw a little level here, right, and we close above this, right, that this won't be valid anymore. Right, and there you go, look at that. There's a drop. Right? But then you can be like, oh, well, Will, look, there's a bullish fair value gap right here. Let's see what happens. It's probably going to inverse it. And it's after hours too, so we have to be aware that, let's see, if this candle or the next candle closes below this line, this is going to be inversed. Okay? Let's see. Because I still think this might have more room to the downside, potentially to like this area right here. Okay. Or I might just jibble around here because it's after hours. There you go. It just inverse. See how that just went away? So it came back. Why? Because the candle never closed below this level. And look at that. Now coming all the way back up. Right? Now coming all the way back down. Yeah. See, at the same time, that's why I don't trade after hours. It's too confusing. And that's why I don't trade fair value gaps either. All the time, because look, oh, I'm going short here. Oh wait, now I'm going long here. Oh wait, I'm going short here. Oh, I'm going long here. It just confuses. I think it confuses me, right? I wouldn't really do that, but it's up to you guys. I don't really like using fair value gaps, so cool. Well, we're about to wrap up here. I know today was like in depth. I should say Tuesdays and Wednesdays. I know I couldn't do Tuesdays lesson last night, but that's why, yeah, it's not a confluence, yeah. But I mean, it's up to you. That's what I'm saying. Trading is so customizable that you can really do it. If I don't use fair value gaps, but you decide to, that does not make you a bad trader. That does not make me a bad trader. Okay? And there we go. We're continuing, right? And that's what I said. Now this is probably going to inverse here, and I definitely think we're going to maybe go to this trend line right here or back down to this liquidity right here, right? So I'm in this short paper trading. Let's go. I just never liked trading after hours either, guys, because I kind of like making trading like feel like a job. Meaning, okay, I trade from 8 a.m. to 10 a.m. or maybe a power hour. Okay, I'm done for the rest of the day. Let's put the charts away, enjoy the rest of my day. If I'm just stuck and like always thinking, oh my gosh, will the market do something? Oh my gosh, I don't want to miss a play. That's going to just make me just always be glued to the charts, which is going to make me just like take too many trades, which is going to make you probably mess up, which is going to, you know what I mean? So But anything else you guys want to ask? Again, this is recorded, so you guys can rewatch this. Anything else you guys want to mention, comments or concerns? Nice job today, guys, like always.